So, what has happened since the last cuddle? Detail, obviously. This is the craziest thing I've ever seen in trading and the markets, which we'll talk about later, and tariffs. That's pretty much it. The headlines have been very Trump tariff related, and all of the knee-jerk reactions regarding that. Now, it's still very early days. Trump's only had, just over 100 days in office so far. Done some really good things, done some really weird things. However, the markets have recovered. So all of the people saying, oh, the stock market's crashed, it's all Trump's fault. They're not now saying, oh, the markets are booming, it's all Trump's fault. Anyway, so that has really sort of dominated the news lines for a while. And even though we've had massive volatility in all of the main markets, the big charts haven't really moved much. So I'm going to speed through these three charts. So every cuddle we go through these three charts, but this is, so for the newer people here, we have US interest rates, unemployment rates in the red, and then inflation. So basically what all of these mean is that what we've been tracking for about a year. In fact, who here is brand new, has never done a cuddle before? Okay, wow. Okay, I will not speed through it. Thank you for being here. Okay, so first of all, there are three charts that I typically follow, and they have almost 100% track record. So whenever you see a massive drop in interest rates, what tends to happen is that a massive spiking in interest rates. These red zones here, which are grey on my computer, these are economic recessions, so stock market crashes. And one of the things we've been tracking is, massive hike in rates equals crash soon. But it's not just that on its own. So when you add in unemployment rates, whenever you have a local low in unemployment and a big spike in interest rates, you then have an economic crash / recession. But it's not just that. When you add in inflation, so when you have any spiking in inflation and a local low in unemployment and spiking interest rates, you have a crash. So literally for the last 18 months, we've been tracking these three charts. And over the last sort of 6 months, we've been like, oh, this is getting pretty scary now because everything's pointing to a massive crash of some sort. And as a community, what we weren't sort of sure on is the scale of the crash. Is this going to be a global cyber attack type crash where, it doesn't matter what crypto you have, it's food and drinking water which is your priority? Or is it going to be a tiny little wobble? Now, thankfully, I think, we're not out of the woods yet, but I think we've had that crash. The Trump tariff wobble was that crash, which means it was nothing. It was an absolute nothing burger on the grand scheme of things. And I think it was enough of a wobble to cause, basically kick the dominoes forwards, which we were hoping for, which is lower interest rates. It will come, don't worry. and then printing. So yeah, also this is the US Purchasing Managers Index. So this is basically showing how active the US industrial base is. So when this starts going up, it shows that the US industry is booming because all of the purchasing managers are ordering stuff across the seas. However, this chart could be a little bit sort of messed up now because of the whole tariff type stuff. So before tariffs, so pre-tariffs, we're in a global market. The barriers to entry or the friction between international trade was, there's always friction, but it wasn't as much. So, a big US company could order huge amounts of commodities and resources from China, India, wherever. Now there's a bit of a barrier. So I think it's going to take a while for the US PMI to come back up. But these are cyclical because this is all in lockstep with the 5.5-year global liquidity cycle. So, I'm sort of pausing on this chart for the moment. But the biggest chart, which as a community we've really been scared about, or I have personally, is the 10 2-year spread. And what I've been saying for a fair while is that we have this sort of blue line, which is the zero line, And every single time the spread between the 10 and 2-year yield goes below it and then back up, it's like danger time. And every single time, I've been doodling over these for years, as you can see, every time we've gone below the 0 line and then back up, when we get to the 0.25 or 0.25 to 0.45 percentage area, which is this big rectangle thing, that's when stock market crashes always happen. And so there was like a 4-month period where we were like dancing in that rectangle going, oh, there's no crash just yet. And then we got the crash and I was like, thank God. So I think that's out of the way now. I don't want to jinx it, touch wood. And when you look at the equity markets, nothing has happened. Just a massive low test. I mean, that looks pretty bullish from a low test perspective. So yeah, this is the S&P 500. And we are basically at lows that we saw, or we're basically at the same point as we were around September, October last year. It's only pushed us back a teeny weeny bit, but it looks like it's about to start pumping. Going back to the fractal model, so I still maintain that this is probably the last predictable cycle. I don't think we will have these 4-year cycles again. Remember, the Bitcoin 4-year cycle just coincidentally was on top of the 5.5-year global liquidity cycle. So obviously they have different frequencies, and so they're starting to come sort of phase out. And also, I think there's going to be a big difference between Bitcoin and everything else. But what is interesting is you probably can't see from where you are, the price action is almost identical. So if you look at this blue ghost feed here, just look at the way it goes up and down all the way up here, and then compare it to what the actual price has done. The price has actually just gone up a little bit more, but the price action, so this bit is this bit is this bit, we have a little bit of a wobble, and now we're starting to boom out of it. So we've got this sort of price action to come. So it's I think it's really good. And I think at the end of this cycle, we will see a bifurcation of 2 markets. So Bitcoin is becoming more uncorrelated. So historically, it's had about an 85% correlation with the S&P 500. I think that's breaking down big time. And we saw that relatively recently with the tariffs. There was a point where Bitcoin, like with everything, dropped and then just stood still, went, nah, no more. And then equities just continued falling. So that correlation was breaking down. And then Bitcoin started moving up when a little bit earlier. So that bifurcation is happening already, so the decorrelation of Bitcoin in the main markets. And the other one, I think, is going to be Bitcoin completely disconnecting with crypto full stop. There's a big chunk of my brain that doesn't even look at Bitcoin like it's crypto. It's just money. It's just the purest monetary source out there. So it's not really in the same category as crypto. And so I think what may happen is that when we have this cycle end, everything else does tank 80 to 90%, but Bitcoin probably only falls 30% and then just carries on going. Remember, BlackRock and all of their buddies, they don't want their clients to have a big 70% price crash on, slapped around their faces. And BlackRock, VanEck, all these big entities, they're heavily promoting crypto to their customers now. So they don't want to do that, and then Bitcoin just to crash 60%. So at most 50% flash crash, I reckon, but it would need something big to do that. So I think it just goes up forever now, literally. And then we get to my favorite chart, which is the total crypto market cap chart. And again, throughout all of these bull markets, we have that falling compression, and then boom, falling compression, boom. And we had the big one, and we're now booming out, and then we had this teeny weeny one. But again, I still think we'll get into my little green circle, which today is yellow. Yeah, so $6 to $16 trillion market cap, and I think we'll all be happy bunnies, even if we hit $6 trillion. And then all the big charts, they still look identical. So US debt will forever continue to outpace everything else because there's more There's like 98% more debt on the planet than actual currency. And so that will continue getting crazier and crazier. USM2 had a slight pause recently, but that will start picking up soon. But nothing will ever catch up with US debt. US GDP, again, that looks strong-ish, but against US debt, it's not strong. And again, we're waiting for an updated chart because Doge is doing some good things. I know a lot of people still don't like Doge, but you know, just give it time. So hopefully they do sort out their budget deficit because it's pretty grim at the moment. And US debt as a percentage of GDP is as high as it's pretty much ever been. But as we said in the last CUDL or several trading pubs, that GDP is a stupid metric. No one cares about GDP. Well, not really, because the way that we have the world set up at the moment with Keynesian economics, which is flawed, countries can have a crazy debt as a percentage of GDP till the cows come home, because all they have to do is just keep on raising the debt ceiling, which is what Besant just declared. And Japan have been doing this for decades. So going back to our smooth-brain bullet points, we're still there. We're still waiting. I've had to readjust my mental model slightly because I was convinced rates would drop in May. I was. And I thought the stock market crashing heavily, along with global trade slowing down because of the tariffs, it was forcing Jerome Powell into a little corner where he had to drop rates. But he didn't. He kept them flat last week. And I think he had a bit of a get-out clause because had the stock markets remained suppressed, he would have dropped them. But because we reversed so heavily out of them, and the stock market's pretty much back to where it was, there's less of a pressure for him to cut. So yeah, he's kept them flat for now, but we're still here. We are still here. We've had that trigger event, which hopefully it was the trigger event, and now we're just waiting for more rate cuts and stim pumps. And then we can all go and buy little islands when Tao does its thing. Also looking at Bitcoin, so this is out of date, it's $103,500 as of this morning, pretty same picture. But in terms of getting out or having a bit of a sidestep, remember it's the angular step change in base support. That's what you need to keep an eye on. So again, sorry, I didn't know there were so many newer people here. I would have had more charts in. But long story short, in every single bull market, it doesn't matter if it's crypto or not, whenever you have a blow off top, you see these big base levels of support. They have angular step changes as the market goes nuts. And when you have an angular step, like a base level support, sort of 70 degrees nose high attitude, and that gets breached, that's when you start sort of clawing profits out of the market. So we're only on this sort of first sort of base level support. So we've got a few more angles to go. And when that gets breached, we start taking profits. My ETH prediction came true, or it's coming true. I thought that ETH would have a very strong and violent sort of rejection of this level. It went a little bit lower. It sort of really attacked this bottom support level, but yeah, we've got that sort of knee-jerk reaction back up here. And so the ETH Bitcoin ratio will hopefully start moving up now. And this is others. So this is all crypto other than the top 10. Again, making some lovely bottoming patterns over here. We've got a bit of a inverted head and shoulders, got the neckline here. So what I see happening now is that the others will start to move up. And so I think this could be the start of the alt market. God, I'm just going to jinx everything today, aren't I? No more crashes, start of the alt market. Oh dear God. It's all being recorded as well. I don't want to be turned into the Jim Cramer of crypto. And I'm sort of seeing this as well. So I had that meme wallet. Do you remember, God knows how long ago, I bought a whole bunch of memes and just parked it in a wallet. And I can't remember how much I put in. It was like $90,000, I think. And then everything crashed. And then it went down to like $20,000. I was like, who cares? I mean, it's got silly coins like ass coin and tits coin and smoking chicken fish and all that rubbish. I had a look at it yesterday. That wallet's now $75,000. I was like, okay, memes are starting to pick up a bit. So once that gets up a bit more, I will be just getting all of that profit out and banging it into subnets. So, and the MicroStrategy play, that was a bit cheeky. I shouldn't really have texted that MicroStrategy post out. But yeah, that double bottom has played out. And again, MicroStrategy is, I mean, he is relentless. He's already looking at trying to raise more money. So he had that $42 billion, so 21/21 bill raise. He's now trying to raise, I think, 80.
Yeah,
Sorry?
It's another 42 to 64.
Yeah, so relentless. And I came across this Twitter, I'm like, I feel like a baby boomer just using old names. It's X, but I still say Twitter. There's a Twitter person called the Bitcoin Historian, and all he does is he just hunts for Bitcoin announcements. I find I quite like his announcements. So I'm just going to pepper you with a few announcements that's just happened in the last 24 hours, or maybe 48 hours. And hopefully you'll see a bit of a shift happening with big TradFi world. So as you can see, Meta is looking at accepting crypto. I think every big retailer, every big company is now, even if they don't like crypto or Bitcoin, they're sort of seeing the trend and they're having to just pivot with it, whether they like it or not. Because if they don't do it, they'll lose revenue or market traction to someone else that does. So I think everyone is going to be accepting it this year and moving forwards. The Biz, which is the head of all central banks, is now calling Bitcoin as a potential hedge. Very interesting. And they've been one of the big entities that have been really suppressing Bitcoin over the last few years. Again, another bank is about to adopt Bitcoin Lightning Network, which is pretty cool. And South America is starting to wake up regarding Bitcoin. And now US banks can buy and sell crypto on behalf of their clients. This is huge, absolutely huge. This is, I think, probably the precursor for the FCA to start doing a bit of a UE on their UK citizens can't buy any crypto-related products. And I know, so hands up who's still got that ETH tracker in your Hargreaves. Hey, there's a few of us. Nice. Hopefully we'll be able to sell one day and then and be able to buy back. So for those not familiar, about 4 years ago, I dumped my peanuts of a military pension. It was £8,800. I got it out of the military eventually into my own SIP, and then I had to pay stupid fees to an IFA just to say I'm being reckless. Yes, I'm going to lose all my money. I'm being reckless. And I put it all into an ETH tracker. So that ETH tracker went from like $8,800 to $120,000. Pounds. But then the UK changed legislation saying that so they banned the selling of any crypto product, but they didn't ban the owning of it. So we're all, a few of us are still stuck in it. So we can sell it if we want, but we can't buy back in. So we've just like, okay, that's our hodl pot then. I reckon probably within 9 months, maybe 12 months, the FCA will probably change that and we'll be able to go in and out. And that's why I've been talking about MicroStrategy. So if you have a SIP, MicroStrategy, in my opinion, is the best way to get Bitcoin exposure. And then BlackRock is now recommending a 2% allocation to Bitcoin to all of its clients. They've got, what, $12 trillion AUM? And Arizona is the second state to be able to buy Bitcoin. So all of the US, or not all, a lot of US states are still going through the motions of getting a strategic Bitcoin reserve up and running. Some have rejected it. I think they'll have another vote once they see every other state starting to buy Bitcoin and get much richer. And then Vivek, who I don't like politicians, but I think he's a good one. So yeah, he's going to try and buy a lot of Bitcoin now. So he's sort of stepping, not down, but sideways from politics for a bit. But yeah. And again, this is just in the last 48 hours, it's just a flurry of news announcements. And then the third richest man on the planet, oh, is it Mexico's third richest man, says real estate is a bad investment. No shit, I've been saying that for years. And, and that billionaires should buy Bitcoin instead. Real estate is an expense, yes. Bitcoin is an investment. So, when you see all of that sort of flooding of really good things, and then you see what just came out of Spain, this is what just came out of Spain. It's just crazy. If you wish to withdraw more than 3,000 euros in cash, you must notify the tax agency at least 24 hours in advance of the withdrawal. You must also specify the purpose of the withdrawal. Failure to comply with this requirement may result in fines up to 150,000 euros. How Luddited can you, is that even a word, Luddited? How big of a Luddite can you be, Spain? So the world is moving to a Bitcoin standard unofficially. Everyone will start to get more purchasing power by being in Bitcoin, and then people will just start looking at stupid countries like Spain going, what? So the UK's had a massive exflow of millionaires. I mean, it's not, we're not, yeah, we're the trail setters in that trend. And I think a lot of millionaires will probably be leaving Spain soon. Because this is not the end. This is how they start. This is the beginning of financial Big Brother.
Are you sure it's not a meme?
Sorry?
Are you sure it's not a meme?
It's real. I know. I thought it was. I thought, you've got to be joking, but no.